Hello and good morning, everyone, to Almus Market Mornings, your daily dose of global financial updates. Now, the sharp rallies seen in equities during yesterday's session seem to be reversing once again as the feared R word, which is, of course, recession, makes strong rounds of the market. JK, today we also have Powell's testimony. What is the market expecting out of that, and what updates do you have for us?
Yeah, good morning. So let's start with yesterday's action. It was quite a bit of rally in major indices yesterday as key technical supports held and some investors indulged in bargain hunting. Supporting their action was another evidence of economy in the US slowing down when data showed US existing home sales tumbled to a two-year low in May as prices jumped to a record high and mortgage rates increased further, pushing out entry level. So this actually looks to be strengthening the case for economy slowing down and probably the Fed getting into a slowing act on the rates. But that is too early to say. But definitely there has been some bargain hunting which supported the market. Also, it was another day of light news flow. Central bank speaks continued to be the highlight, but overall there was little change in tune out of ECB or the Fed. But BOJ officials, the Bank of Japan, continued to try to talk up the yen. But the policy is clearly on the other side. So we do not really see the effect of the same. Meanwhile, the market is out to test the Bank of Japan, pushing the currency through 136 with ease. Interestingly, former US Treasury Secretary Larry Summers, who faced criticism from Biden administration in 21 for saying inflation would rise in the US, predicts that the US will likely see a recession in the next 2 years because of an overheated economy and says he expects interest rates will continue to rise. He repeated his prior calls that Fed task of tempering price gains is similar in scale to that of Paul Walker in 70s, who had to engineer a deep recession and double-digit unemployment 40 years ago to get the inflation under control. President Biden got into the act immediately and he spoke to the former Treasury Secretary on the matter and came back and said that recession was not inevitable. The big question now on the markets is obviously about Japan and what happens to the yen, whether the Bank of Japan will intervene by selling USD for yen. Technicals show that dollar yen is in a overbought zone with RSI at 84, a reading which was last seen as far back as 30 years ago on the monthly chart. So an action at this extreme level can have some effectiveness. And as we know, central bank will not enter the market when the chances of its success are low. Let me say that if yen continues to weaken at the current pace unchecked, we will have a serious risk of a currency war in the Asian region, signs of which are already there. Korean officials have already given a stealth indication, and the Korean won has seen a new 27th month low against the dollar today morning itself. Uh, in contrast, the UK central bank, which is looking to push up the currency as part of its strategy to address rising inflation, while Mr. Pill, BOE member, is laying foundation for hikes in steps of 0.5% in the coming months, as inflation may reach double digits going forward. Ms. Catherine Mann said that Bank of England should raise rates faster than it has so far because sterling's weakness is adding to Britain's inflation pressures, and that without a robust policy move, domestic inflation already embedded would be boosted by inflation imported via weak sterling. We have the inflation data from UK at 12:30 p.m. IST today. Powell's statement, of course, will grab headlines in the evening as it testifies in front of the Senate. Focus will be on recession risk, whether to follow up on a 75 BP move, which was done in June, as similar moves in July or September, and just how the evidentiary bar is to conclude that inflation is slowing enough for some let up on the March higher in the policy rate. So he will be grilled on both counts, how far the policy rates will go and what are the chances of a recession and how soon it might come and when the policy rates might be peaking. These are the things even investors are interested to know. So it will be a very interesting evening today. On the rupee, of course, it moved higher. I mean, the USD after consolidating for a day below 78 As a post-US holiday, we saw good remittance demand from various quarters. FIs have continued to be sellers in Indian stocks, despite it being a strong up day for the stocks. The rupee remains host to the oil price moves, which keeps dollar demand well above supplies and further accentuated by FIs selling in stocks. Technical charts are indicating that crude prices can correct deeper, maybe up to another 10%, and that will help rupee to recover marginally. However, with the current demand supply mismatch likely to continue due to lack of flows, any correction will be limited to 77.40 or 77 at the most. Another point to note is that swap points in INR have moved further down, with 1 year forward quoting at 2 rupees 40 paisa, 3.07%, which was the low seen in 2019. Below these levels were seen only in 2012. We don't expect a further breakdown immediately, but will not rule it out in the coming months as Fed moves with the faster pace of rate hikes. Finally, we also have the minutes of RBI's MPC meeting held recently for looking closely at individual members' comments on inflation and the policy path going forward. So all of you have a nice day. Thank you.
Okay, thank you, JK. That was insightful as usual. I want to just touch upon one point you mentioned regarding housing. So we are in the midst of observing pressures of rate hikes on the housing central as central banks raise rates around the world, causing pressure on mortgage payers and fall in demand for homes. So there is some pressure building up on that front because after years of the easing, we have moved into the tightening cycle. So a lot of developments will be incoming, and to keep up with the developments, follow our YouTube channel and drop in comments for any queries, and our experts will be happy to indulge in the questions. That's it for today. We'll see you all tomorrow. Goodbye.